where do you need your area of focus to be? There's multiple areas of focus, but what's the biggest one you need to look at and start working on to impact your practice the most?
Welcome to Dental Momentum, the podcast dedicated to lively discussions on business and financial strategies tailored for dental business owners. At Duckett Ladd, we're committed to transforming your business journey and supporting you at every stage. Join us as we delve into the keys to long-term practice success, from cutting-edge accounting and strategic tax planning to personalized business strategies. Together, let's propel your dental practice forward with unstoppable momentum.
What's happening, Bill? Ready to pick up where we left off?
Yeah, it's good to be back here, man. Ready to keep the conversation going.
Let's do it. So if you guys haven't listened to the episode before this one, stop, go back and listen to it, because we're going to kind of build off of each other, if that makes sense. And so what Bill and I are doing is we had an all-team training here, let's say the end of April, give or take, and really dove deep into the business of dentistry, trained our team, and kind of what we're doing is unpacking, if you will, the training we went through. And so go back and listen to the first episode. In that first episode, we really dove into the speed financial statements, Bill, and really, unpacked, the data that you need and what it needs to look like, because you can't make decisions off of bad data. So kind of just riff off that a little bit off our old episode, and then we can kind of build into this new one here.
Yeah, definitely worth going back and listen to, because when it comes to financial analysis and financial acumen, the business of dentistry, I mean, that's the cornerstone, is you have to have good financial reporting. And we think the frameworks that we gave there with the speed financial, simple, precise, effective, efficient data, or maybe efficient, effective data, that's a great little framework to use to try and make sure you have a good packet. We certainly recommend people evaluate themselves against that criteria. To have a great practice, you have to have great data. I mean, I think that's a core belief of ours. So, again, it's a simple framework. Use it, analyze, and that's the first step. If you've got that, you're a good way down the journey. So then it becomes, okay, I have good data. Now what? And that's hopefully what we'll begin to unpack under this episode and the next few afterwards.
Yeah, well, let's do it. I mean, and like we said, I think on the first part, like the speed financial statements, it's not, I can say this, it's not rocket science, right?
No.
Like going through it's simple stuff, but we've said it all along, like the hard thing to do is to make things simple.
Yes.
And I think what
Agreed.
Bill's getting ready to go through here is very, very simple, but it doesn't have to be complex, right? Analyzing, or I should say diagnosing a dental practice. So Bill, let's just dive into there, right? You've got good data, you've got the speed financial statements. What are the questions, if you will, that you kind of go through here on how to diagnose your practice?
Yeah, first, let me kind of back up real quick, too, because I think what you said is important. You can make this thing complicated. You can have paralysis by analysis. That's just not how we are wired. We're not in a dental practice every single day. We don't have the ability to master the business of dentistry through repeated daily interactions in the business itself, like some of the people we work with or some of the people we've met along the way. I mean, it's amazing to me how well they understand the business. But I've said this before, and I'll say it again, is ultimately, I don't feel like the business of dentistry is overly complicated compared to other industries. You know what I mean? When you look at, like I think I mentioned in our presentation, in my previous career, I worked with colleges and universities, and I worked with amusement parks and tech contractors. I mean, those are complicated business. The good thing about this is the business itself is not overly complicated. It's like a CPA firm. It's a service-based business, which is good in a way that it's easier to understand. But what a service-based business also is a people business, and that's what makes it complicated. So that's why I say the business of dentistry is simple, but not easy. And that's where people kind of get involved. So that's kind of the framework we use to say, listen, I did this presentation in front of a group, and it did not hit well because these guys were seasoned CFOs and they got it. They were masters. So, really this is probably to simplify it down for people who are trying to grasp on where do I even start, and how do I get good frameworks to analyze my data once it's good. Again, that's the first episode. So, in the vein of trying to keep things as simple as possible, that's how we operate. That's how we try to train our people to operate. Is I really think you can kind of ask yourself four very simple questions, Jared. And again, this is going to be super simple for some people, but that's how we operate. And that is number one, do we have a production issue? Two, do we have a collections issue? Three, do we have a spending issue? Or four, do we have a combination of all three? And, again, when you're looking at a practice, one thing I think we touched on last time, but if not, we'll reiterate it here, is you have good financial records. You have a net operating income, which we feel like is that metric that you always want to track and make sure you start there. That will give you a really good indicator of what it takes to run that practice. And we like that number to be 20%, that net operating income. And if it's not, then that's where you ask these questions and kind of start diving deep. And guess what? Even if it is, sometimes it still helps to ask these questions because there's always ways, almost always ways that you can find to make your business more profitable. So those are the four questions we start off with.
Yeah, and again, the very very simple questions, right? But that those are the 10,000-foot view, if you will, questions that you guys always talk about areas of focus, right? In
Right.
every single dental practice, every single one, there is always something that needs to be fixed, made better, iterated, perfected, right?
Yep.
But what is the most important thing that you can work on that's going to affect your business the most?
Yep.
Increase it, make it better, the easiest. I shouldn't say the easiest. Have the greatest impact on your
Yeah.
practice.
Yeah.
That's kind of what this is doing, creating that area of focus to say, okay, look at it from these three lenses. Which one is off the most? And we'll kind of go through that in future episodes. We could kind of briefly maybe talk about each one here real fast a little bit,
Sure.
but then, okay, yeah, that's the one I need to fix. That's my area of focus for Q3, whatever, because by doing that, it's going to make everything else better.
Yeah.
Does that make sense?
100%. And this is again where we'll say that we are financial guys. We love presenting financial data. We love the story that financials tell us. But at the end of the day, we're not on the operations team. And that's where, whether it's you as the owner, whether you have an operator, COO, director of ops, whatever, the data has to be actionable. It has to give you areas of focus, like you said, where you can really build out great initiatives to try to fix stuff that's broken. And again, it's, we try to keep it very simple, high level, 10,000-foot view. As you dive deep, you're going to find complexities. Sure, that happens. And, you have to kind of iterate your process as you go. But generally speaking, if you just kind of look at it, and let's just start at the top, Jared, and you say, okay, I am a service-based business that goes to work, performs dentistry, perhaps I have hygiene, and what we do is we produce dental services that produce, revenue, right? That's ultimately how it comes. But, with our team, what we had to do here is really start at the very top and say, okay, when it comes to production, there's a couple components, right? There's your gross production, and then your write-offs, your discounts, whatever you have comes down to your net production, assuming you're a PPO. So I think that was something that was an interesting conversation, an interesting eye-opening thing for our team, is really understanding how you can kind of take a peek at gross versus net, and it can tell a story sometimes too, Jared.
Mm-hmm. Yeah, 100%. I mean, diving into, the specifics of what makes up the metric, I mean, is huge. You know what I mean? And so, yeah, I mean, you're right. The first thing to look at is the production. Are you producing enough in your practice to hit that 20% number?
Yeah.
You know what I mean? It's an equation, right? Production, collections, and spending, basically.
And we'll get to the specific metrics that we track at the 10,000-foot view. But again, I think just a real interesting point is I've seen a lot of people who are pretty, good at what they do. They look at gross production when they're setting goals and things, but they were setting goals from gross production. This is the PPO, insurance-based office. that was not going to hit the profitability metrics we need because the write-offs percent, let's say it's 33%, whatever it was,
Mm-hmm.
took so much of it right off the top. And that was one of those quick foundational things is well, one thing we learned from some of our mentors is gross production is a good number to see, but at the end of the day, net is what you can collect. And that's what you can actually bring in the door. So anytime we're talking about production, if we don't say it, qualify it with net production, that's typically what we look at, Jared, because at the end of the day, that's what you can bring in as revenue. And so that's just something that was a learning for us. And we've seen folks set up goals based upon gross that are misleading, and it'll never allow you to hit that profitability you want.
Yeah, you got to talk apples to apples when you're talking about practices and net production and gross production and write-offs, adjustments, and what that all means.
For sure.
So dive into the collection side just real fast, briefly. I mean, you get, are you producing enough? But then number two, are you collecting enough, right?
Yeah, this one's super simple. I mean, this is revenue. This is one that probably the minute you come out dental school and the minute you get on forums, you hear probably the most common metric ever in dentistry, which is 98%, right? We want to collect 98% of the net production. Again, don't look at gross. It's going to be misleading, but of net production, what you can collect, you want to collect 98%. So this is really interesting, Jared. We're always learning. And that's one thing I love about our firm is we're curious. We have no pride of ownership. We learn as we go, and a lot of times our clients make us better. But I was actually at a presentation, and when we get to our 10,000 foot metric, which on spoiler alert, it's going to be the 98%, right? There was a guy in the room who was like, that's good, but it's somewhat flawed because each month can be very different. You could have a low production month, but collect a lot from a high production month and have a super high, collection percentage, but the next month is poor, the previous month is poor. So, that's where you got to learn the little tricks of the trade that collection percent over time, you want it to be 98%. So whether you look at 1 month or whether you look at 90 days or whatever, that's definitely something we want to do. Maybe I'm getting way too ahead of myself to our collection, but I think we can find plenty of stuff to talk about. But at the end of the day, the main concept I want dentists to understand is they should be morally outraged if they're not collecting on their work that they're doing. I never understood when people were satisfied or didn't care that they were only collecting 93, 94, and that's not uncommon, Jared, to see that.
Yeah, 100%. It's a lot of things, or I should say 98%. It's a lot of people just don't look at it. A lot of people walk around or talk to their buddies at conferences and stuff about their production, right?
Yeah.
First off, go back, make sure they're talking about net production. But it doesn't mean, let me say it this way, it probably doesn't mean much to produce if you're not going to collect it.
100%.
Right? Now, I guess I'll go back and say, yeah, you are helping that patient and providing that dental service. That's great from a service-based standpoint. But as a business owner standpoint, you're working, you're producing labor, you need to be collecting at least 98% of what you're producing. Because, and we'll dive into it on the collections piece, if you're at 98, right? I should say if you're at 90, difference between 90 and 98 is 8 points it's math, right? And we can put a dollar amount to it based on production. It comes right off the bottom line.
Yes, 100%. I think that's where we look and say a lot of times when you get started really diagnosing these practices, some of the key initiatives that get started first are around receivables and collections, because that's typically a little bit more of a lower hanging fruit. You just put some labor hours to trying to address it, and definitely we'll spend some time there. Key point is when you look at a financial statement, unless you're on some kind of an accrual basis, when you see revenue, that is collections. That's what you brought in the door. Again, if that's all you're looking at and not looking at what you produced net versus what you collect, then you're kind of just missing a piece of the puzzle, and you could just kind of limp along. And I do see people who don't spend as much time focusing on production to see if there's broken there, make assumptions that the revenue coming in is what it is, and not really stop to say, am I producing all that I can? And not just that, but am I collecting all that I can? And that's the foundation. That's the starting point, because you know it is. You have to generate revenue, bring in cash in the door, or you're going to go out of business. Those two right there are two of the most important that tend to have some initiatives coming off of them, both of them pretty quick when we start seeing clients analyze their and help them diagnose their their financial statements.
No, and those two questions revolve around, the revenue aspect of it. But you guys know, if you think about a profit and loss statement, we're talking about the 20% NOI. That's a factor of revenue and spending, right?
Sure.
Revenue and overhead expenses going out. So let's hit on this last one briefly, real fast, right? Do you have a spending issue? What do you mean by that?
Yeah. So you could break this into two parts, and we break a financial statement into two parts. And would always, if anybody has any questions, they can always reach out to us, and we'll give a sample financial statement. But you start with that revenue as the top line, which we've already talked about. Function, gross production minus adjustments, write-off collection or write-offs, discounts equals your net production. What you collect of that creates your revenue. Well, then you have a breakout of expenses, right? And one thing I will tell people is, if kind of getting back to the presentation before, but if you just see all your expenses listed alphabetically, you're not getting good data. That's not effective data that allows you to benchmark, like we talked about last time. So what we like to do is say there's two components of spending. There's cost of goods sold, and then there's operating expenses. Cost of goods sold is basically what it takes to perform dentistry. What dollars have to go out to perform dentistry? And for us, that's your clinical team. That's your hygienist, your assistants, that's your associates. And then we kind of lump supplies and labs together and call those controllables. And we think that those should be broken out separately as a cost of goods sold, like major heading in your financial statement. So you have revenue. Again, I say stuff over and over, but gross production, write-offs, whatever. Getting to net production, what you collect is revenue. And then you have cost of goods sold. And that's those key clinical categories that tend to be more variable in nature. As you produce more, you tend to spend more on those. And that creates what's called gross margin. And that's a really good starting point that, can kind of help you figure out what your break-even point is. That's something we can maybe do an episode on later on. But you start there, and that's kind of what it takes to run clinically. So that's a really important idea you need to look at. And we'll go into details in our next episode about how to look at cost of goods sold spending, what the ratio should be. But, we do tend to see a lot of areas for improvement in that space. Anytime you're a people-based business, there has to be, there's almost always room for improvement in that side of it as far as people cost. But then also really on controllables like labs and supplies, that can really spiral out of control if people won't watch it. So that's your cost of goods sold. Get your gross margin. We'll give ratios we think you should hit in our next episode that we cover this in more detail. But then you have your what we call operating expenses, OpEx. You've heard it called overhead. It's really what else does it take to run this business? You have rent, you have your insurance, you have your marketing, you have your front desk people. You have all these key categories, pretty much everything else. And in that episode on spending for OpEx, we'll walk through what kind of those categories should be, what they should look like. But, there tends to be an opportunity almost immediately if you're not really budgeting these type of costs, which tend to be more fixed in nature. In other words, they tend to be fairly stable and predictable. I guess I'll put it that way.
Yeah.
They're easy to budget for. And that's one of the first things we tend to see. And I think we talked about this in our package of what you should get is if you don't have a budget, you need to have one. And somebody needs to own that so that you're not overspending. But again, this is something where you look at your cost of goods sold, you look at your operating expenses. There's certain kind of ratios that we like to see people fall in. And that's a really quick litmus test of if we're not hitting our 20% net operating, then we're probably spending too much somewhere down the road. You got your revenue, you got your cost of goods sold, goes gross margin, minus your OpEx. There's your net operating income. I mean, that's as simple as the financials should be. So definitely, these are maybe not as high impactful sometimes, the OpEx, but you could see that there's leakage there sometimes. And it's a way that maybe you can add a percentage point or two to that net operating if it's not quite at that 20%.
Yeah, no, you're spot on. And when we get into that episode, I think usually dental practice owners out there think like, okay, I'm not as profitable as I should be. A lot of times they probably default to, well, I've got a spending problem. My expenses are too high,
Yeah.
right?
Yeah.
My overhead's too high, which I would argue that's probably usually not the case. It's normally more on the revenue side to a degree, but we can get into how to show that, right? How to really diagnose to see if you really have a spending problem or not. So that's going to be a fun episode to get into. And then the fourth one, right, Bill? I mean, is it a combination of all four, right?
And most of the time it probably is, Jared.
Yeah.
There's a little something that can be fixed in all three of those buckets: production, collections, spending. And that's okay. So that's where having someone alongside you who can help you brainstorm, how do you prioritize? How do you triage your list? Because that's what we love to do, Jared. When we're working through with clients, when we did our case studies with our team here, we build out an issues list. And as we go along, if we see something that's broken, we put it on there. And then when you're looking and you're saying, I've got a production issue, I've got a collection issue, and I got some spending issues, you're looking at a list that may be 10 bullet points long, 13. What do you do? And that's where you have to take it and say, I've got a combo of all three. What do I need to focus on first? And when do I need to have it done? And who's going to own it? Who's going to be responsible? And this is where we'll say having a great operator helps, but having a good team too, where you can, take some of these tasks that really are housed at more appropriate places, like say spending of controllables at the office manager or something like that. You get them involved. And now you start trying to build out initiatives that involve the team members who are stakeholders in that line item. And you can tend to see some good movement pretty quick if you put some intentionality behind it. So most people we work with when we first start, they have that they're in the fourth question, which is we have a little bit broken in every single question we asked.
Yeah. So that's what we're going to do, guys. I mean, it's very simple. The 4 questions we're going to go through. Next episode, we're going to dive into that first question. Do you have a production issue? Right? Again, I'm going to say this. If you're listening to this specific episode, I say live or within a day or 2 or 3, whatever of it dropping, go back, listen to the speed, get your speed, because what I want you guys to do is come to the table, meaning 2 weeks or so from now when the production episode is released and you guys have speed financial statements in front of you, because we're going to reference stuff back to the financial statements, right? And so get this stuff together on your side. We're going to walk through this over the next several weeks, almost month and a half, if you will, when episodes drop, of getting to the end. It's like, where do you need your area of focus to be? There's multiple areas of focus, but what's the biggest one you need to look at and start working on to impact your practice the most? So I think it's been fun, Bill. I mean, I think viewers will like it. Again, very simple, but simple works, is my opinion.
Yeah. And we love feedback. Like I said, we love to learn from people. Seems like every time we talk to somebody, we learn something new. So we want feedback, comments, like, share if you find it impactful. Our goal is to be working towards building out a really great scorecard that as we go through your speed financials that you have, you can see and kind of stack up where I shake out. And hopefully we can kind of smoke out some issues together, almost as a case study as you're listening to these with your own financials of, do I have production issue? Do I have a collection issue? Do I have a spending? Or do I have a combo of all three?
Yeah, 100%. So again, speed financial statements. If you guys are like, what the hell is that? Message us. We can give you a sample financial statement so you can fill out real fast before we dive in. But I'm ready to go, Bill. Let's shoot the episode right now. The first one right now.
Sounds good.
No, it's going to be fun, man. Looking forward to it.
You got it.
All right, we'll see you guys.